Hi, how are you? Hope this gets you fine. As I said, I'm Don, and today I want us to just have a brief introduction of Forex, as I promised. And this is just the foundation. It may seem complex at first, but make sure you don't compromise at just the beginning. Just make more profit, make more attempts and more practice, and it's going to be very easy. Now, my interest today, I want us just to introduce very briefly by answering these three questions. Number one, what is Forex? Number two, what is traded in Forex? And how do traders make money? So that's the thing that I want us to cover. It's very simple, as you are going to see, it's very simple. So at first, what is Forex? What is Forex? Now, if you write the word Forex, you can see it has 5 letters, meaning first three is FOR and the rest is EX, meaning it is a short form for the word foreign exchange. Forex is a short form of the word foreign exchange. So therefore, Forex is a marketplace for currency exchange. So it's very simple. It's very simple. And I know you know how these things are applied. For example, if you're moving from one country to another, you need to exchange your currency so that you're going to be able to use it in the country that you're going to spend your time in. So that is what is basically Forex. So it's just a marketplace where people buy currencies or exchange currencies. So that answers our second question, what is traded in Forex. As I've said, we trade currencies from one country to another. So if I have euros, I convert them to dollars, etc. So that is what is traded in Forex. So like for instance, we have very many currencies, maybe like US dollars, we have euro, yens, Kenya shillings, and many other more for different countries and their preference on which currencies they use. Now, in forex, we always trade pairs. We don't trade one currency, but we trade pairs. Meaning, the trading, if it's US dollars, you're trading it against euro. If it's euro, maybe you're trading it against yen, but not individual currency. So take note of that. That is very, very important. Now, for you to understand this, I want you to we get a deeper concept of what we call currency exchange. Currency exchange. As I've said, forex is where we exchange what currencies. So now let's introduce a concept we call currency exchange. Now this is very simple, as we're going to see. Now remember, recall I have said we don't trade individual currencies, we trade pairs. Now for instance, we have these two, that is euro, USD. So these currencies have their names according to their positions in the pair. So the first currency in the pair is called the base currency, meaning euro, in this case euro USD. If you're trading a currency or the pair, euro USD, the first currency is called the base currency, and the second or the last one is called the quote currency. So the price of that pair is determined by both the quote and the base currency. That is very important. And we have very many pairs that is traded in these global markets. As I just said, there are very many. For example, you have Euro USD, meaning a trading euro against US dollars. There is a GBP USD, there is a USD, GPY, USD USD CAD, then USD dollars. There are very many. So that should not disturb you. Which currency should pair? Should you trade? That you're going to get deeper in another forum on another class. But today I want us just to have a brief of what you're going to talking about. So now let me give you an example. If, for example, you're trading this currency, that is a Euro USD, and for now the pair is at this price, is at the price of 1.1. The pair trades at 1.1, meaning that if you have €1, you need, or rather, if you need €1, you need 1.1 US dollars. For instance, if you want to buy €1, you need 1.1 US dollars. So that is something that you should just get into your fingertips and understand what I've just said. If you need €1 and the pair is trading at or the current price of that pair is 1.1, and you need to buy €1, you need 1.1 US dollars. So you're going to do more practice on that. You're going to get more examples. For example, if GBPUSD currently is trading, or the current price of this pair is 1.25, how many US dollars do you need to buy one British pound or one GBP? You need 1.25 US dollars to buy what? One. You need 1.25 US dollars to buy one GBP. Hope that gets clear. Hope that is clear. Hope that is clear. I can also repeat. So you need one. For one GBP dollar, you're going to exchange it. You're going to exchange it for 1.25 US dollars. Hope that is clear, because that's the most fundamental thing that you need to understand. So that's very simple. If you don't understand, let me know. I'm going also to repeat. So how do traders make money or make profits? So Forex traders make profit by correctly predicting whether one currency will rise or fall against the other. Remember what I've just said. We don't trade one currency, we trade a pair. Meaning we have the base, the first one, and the quote, the second one. So meaning, if you anticipate that the first one, or the base, is going to get stronger, you're going to buy. And if you anticipate or you predict that the quote is going to get stronger, you do what? You sell. Now let's get deeper. So if for instance, let's take this chart here. This is a chart of Euro USD, and assume it was at this point. That you predicted, or you were at the market before this movement. Before this whole movement, the trade was here, or the current price was here, and you anticipated that the price is going to move up. So what you do, you're going to buy at this point position here, and sell at which position? You're going to sell at this position. Meaning, if you bought at this point, for example, for instance, say the price of this pair, the price of Euro USD at the time you're buying it was 1.1, then the price rises to 1 point. Let's say, let me try to write it here. So let's say the price here was 1.1. Then the price rose to this point, or 1.12, meaning you bought low and did what? You bought low and sold high. So the difference between these two becomes your profit. The difference between these two, the price you bought and the price you have sold, becomes your profit. Hope that is very clear. And that is just the foundation of what Forex is. So we have just defined what is Forex. We have said what is traded in Forex. I have said is currencies. We trade currencies. Just not one currency, but a pair. We have also said a pair contains two currencies. The first one is called the it's called the base. The second one is called the quote currency, and we have just defined how the currency or the exchange rate happens, or how all the technicalities of exchange rate, and how if you need, just like for example here I've said, if you need one pound, how many USD will you need? And so let's meet in our next video, and I'm going to expound deeper, and we're going to get into deeper concepts about the forex market. Thank you.